Today's CPI numbers caused some serious moves in the market. Indices were up, we had the dollar tank, and many other markets in between had some interesting moves that we're going to go over in today's video, as well as I'm going to show you the current trades that I'm looking at. In fact, let's start there. All right, guys, so I want to start out just by showing you a current position that I have on. This is a GLD trade or a gold trade. Now, different than CFDs, which are like XAU USD, GLD just tracks the same thing. It is just a ETF instead of the gold market. Regardless, I went long gold a couple days back last Friday, ended up catching a pretty good reversal off of these lows. Now, this is more of a trend trade. You can see we've had a explosion outside of this consolidation zone. Once we pulled back, that's where I entered my trade, and I've been holding on to it since. Well, today's numbers were actually quite bullish for gold. In fact, if you didn't catch the numbers in terms of CPI, I want to just take a quick pause, check out what Johnny Hart, myself, and of course Craig Erlam from the Market Insights Market Pulse podcast talked about when it came to CPI numbers that came out this morning. Here's a little bit of a recap. We are talking in terms of inflation numbers this morning. We had the inflation headline number come out at 4.9% compared to the 5% that was expected. So the markets reacted pretty interestingly to this. We saw the dollar sell off pretty aggressively, as one might expect, as we're seeing some signs that there is some inflation cooling going on. Now, of course, a lot of risk on assets also rallied today off of this. We had, of course, the dollar down, but we had the NASDAQ up pretty tremendously today. We had a nice move there in terms of retesting and even breaking through the highs here from our recent pullback. We're up, over 1.5% here this morning. So it's a pretty solid push to the upside there. And then, of course, we had just to mention to some of the currencies out there. We had the Australian dollar strengthen pretty aggressively today, and it seems like a good day for many risk on assets, as well as a nice push to the upside there on the gold market as well. Craig, I'd love to get your thoughts in terms of reaction to these CPI numbers. What caught your eye here? What are you looking at today?
I mean, I think the first thing that stands out to me is, are we really getting that desperate now that we're clutching at straws over such a small beat or even a decline, should I say? This is very marginally below expectations on the headline, and as you said, alluded to, in line on the core side. There's still a long way to go, and this by no means guarantees that the Fed is going to look favorably on this, either from an interest rate perspective at the next meeting in a month's time, or whether they're going to cut rates later on this year. I think it marginally tips the balance in favor of holding at this point, but there's a lot of economic data to come. It almost feels like we've gone into this report with so much fear that it could be higher, that it's almost feels like a relief rally more so than cheering the result.
And if you guys would like more of that podcast, you can always check it out on Spotify. It's a great place if you want to catch me there. I'm there a couple times a week going over the markets with Craig as well as Ed Moya, who are both analysts with Oanda. So if you guys want to check that out, again, there it is, linked in the description. So one thing I'll say about my gold position is I'm looking here at this point to see a decision point. We had CPI numbers which pushed gold higher, but if price is able to break back through the lows here, that's going to be a cue to go ahead and get me out of my trade for a profit. Now, again, I entered over here. My stop losses trailed into profit, so I can't lose money. At this point, it is a question of whether or not the market wants to continue and give me more on this trade, head back to potentially previous highs, or if it's going to erase those gains. Let's talk about some other markets that moved, though. We can take a look and we can see that here's the NASDAQ, which had a really strong pop to the upside here off of this CPI number. Now, of course, inflation cooling is positive for the markets in the sense that, there's less concern that the Fed will step in and raise rates further. They're accomplishing their goal and sort of getting that big bully off the block, if you will, that holds a lot of equities markets. It holds the markets down in terms of rate hikes and that sort of concerning stuff. So in my opinion, where are we at with the NASDAQ? My opinion, the NASDAQ looks like a buy on a pullback. And part of the reason why is that I'm not the only one who thinks so. We can also tap in and knock on the door to institutional traders and say, hey, what do you guys think? And here it is. In terms of the COT report, we track the non-commercials. from the commitment of traders data. And what we can see here is that there is a high preference now for the first time ever. Well, not first time ever. The first time in quite a while, we're seeing a interest on the NASDAQ long side that exceeds the short interest. Now, when I say short interest, this is positions held on the futures market from non-commercial traders. These are your hedge funds, smart money, like institutional traders that are banks, and there's professional speculators, and they are actually net long biased on the NASDAQ. Not to say the same for the S&P and the Dow, which both lag in these areas, but the NASDAQ looks increasingly interesting in this regard. So I'm watching the NASDAQ for possible pullbacks as a possible opportunity to get long. So that's what I'm looking at. Again, you guys, by the way, we are doing a free trial of the EdgeFinder. This is not something that we usually do. So if you would like to try out the EdgeFinder for free, here's how you can do it. Down below in the description, we'll have a link that takes you to a live chat feature where you can direct message right now one of our team reps here at A1 Trading. So if you want access to the EdgeFinder for free to try it out, click this link that's in the description, click EdgeFinder/trading software access. Just put your name and email in there, and you will immediately be connected with someone here in the office who will set you up with a trial to see if the tool is a fit for you. Again, we have many traders using our software. We're a software company in Atlanta, Georgia. We build tools for traders. So check it out, see if it's something suitable to you. Let's also now, while we're on the page, we'll take a look at retail sentiment. And feel free to pause the video if you want to take it slower. This is showing us the net positioning of retail traders according to client sentiment on various brokers. So if we take a look at the dollar CAD, 88% are short of retail traders. If we take a look at NZD USD, the opposite extreme exists where 86% of retail traders are actually on the short side. What does this tell us? Well, if we know that everyone is shorting the NZD USD, it's probably more of an interesting opportunity on the long side. And flip it around, USD CAD, I like to be sort of contrarian to what retail traders are doing while following with what institutional traders are doing, right? These people, unfortunately, tend to lose money, whereas institutional money, of course, is the most professional in the business. They're not always right, but they're winning more than they're losing, right? That's why they're the professionals. So, I keep an eye on this one. We also have dollar Swiss. Let's also flip while we're on the retail sentiment tab. We'll take a look at commodities. Many of you guys who are watching gold may be interested in this, but we'll also add indices. So in terms of indices, you have German 30, Japan's stock market, the S&P, US 30, and NASDAQ. All of these retail traders are very short biased on. On top of that, retail traders are also very short biased on gold. And then finally, you have the UK 100. The only one that retail traders are buying from this list right now seems to be oil. So that's kind of where I'm watching right now. So oil is positive, everything else they have a short bias on. And again, feel free to pause the video. And also remember, grab that free trial linked in the description if you want to check out the software for yourself. So what else? Well, the indices, the S&P 500 also caught a little bit of a bid, and same with the Dow, but now they're erasing some of those gains. The one that seems the most resilient is, of course, the NASDAQ. So I am looking at this one, again, this breakout, possible retests, in my opinion, could be opportunities for more upside, as that is also backed by what seemingly the institutional traders have been up to as of the most recent filing. Here's Bitcoin catching a little bit of a bid, and along the way, many other risk-on assets are having a good day today. Off of this inflation cooling report, hey, the Bitcoin market catching a little bit of bid. This makes sense, right? Bitcoin is a risk-on asset. By its nature, it tends to go up when markets are a little bit more optimistic, and clearly it tends to go down during fears of really, really tough times, which we saw much of 2022, right? The DAX here trading still near the highs. We've got the NASDAQ, which we already mentioned, the US indices, interesting there as well. Let's also take a look at some currencies here. We'll take a look at the euro. If we take a look here at the euro, you can see we are still trading in a range. Here's your daily chart. We've been sort of slowly trending higher, we've been trending higher, but then now our slowing is existing. And this is not necessarily a bearish, situation. Many traders would take this as, well, now it's just going to go back the other way. There is the possibility that this trend happened, that we are now ranging, and the market is waiting for further ideas in order to trend a new direction either up or down. So right now, where does that leave me? Well, it leaves me with no bias on the euro. This is too choppy for me. The dollar does look weak, but as we know from institutional positioning, the euro is also a favorite in terms of institutional money, 77% on the long side. So if we know that institutional money is long the euro, but the dollar is very weak, there's just too much conflicting stuff here to really get long. Now, again, the dollar is weak, but the dollar is also, in terms of institutional positioning, rather impressive, right? You have 66% contracts long. So I don't really have a strong preference when trading this. However, for the traders out there who are watching this on the 4-hour chart, what I've noticed is that if you are able to break underneath, this could turn into a bigger move if you think dollar strength is potentially in the cards. And same thing to the upside. If you get a break, I think you may have sort of a momentum move either direction based on how price action forms going forward. Same sort of story with the pound. Well, actually, the pound has been a little bit more impressive. The pound looks like it's trending well. Same with the Australian dollar, which we'll look at next. We've seen the pound here pretty aggressive to the upside. And in my opinion, the pound has more upside to go with a weaker dollar forecast that I've had the last couple of weeks. We'll see if that turns into anything. I would say pullbacks in the pound look intriguing. Part of the reason for this, inflation very, very hot in UK. We have on Thursday, we have the Bank of England, which will be reporting their decision on interest rates and perhaps their forward-looking guidance, which will be very, very interesting to watch. So, the trend here seems to be to the upside, and for good reason, right? Inflation very high. They can't stop their rate hikes most likely because, again, that would be really, really catastrophic to their inflation problem. Whereas comparing it to its US counterpart, which has sort of been on the turning ship to even potentially rate cuts starting next year. That's sort of the consensus, with some people even saying sooner than that. So there's a difference in story here. The pound looks to be the more attractive currency due to rate hikes being faster paced and more expected there. Hopefully that makes sense. Please feel free to ask your questions in the comments. I try and get to as many as I can. Drop them down below. And also, real quick, if you guys made it 9 minutes and 50 seconds into this video, well, actually, I guess when we add in other clips, it'll be longer than this. If you made it this far into the video, comment down below that you made it this far. I really do appreciate you guys. I hope these videos are helpful to you. They're very helpful to me to even make them. As a trader, it is very beneficial. I can tell you that. I report this stuff every day. I'm studying this stuff every day, and hopefully it's helping the audience as well. I mentioned I would do Aussie dollar, so let's take a quick look here. This one also, the RBA raised rates more than expected recently and is on a course, I would say, to more of that. So the Australian dollar on pullbacks actually looks pretty attractive. You've got levels of resistance, levels of support here coming into play around 67.50, 67.50. I would say this momentum should keep going, based on what we saw today. This pullback looks a little bit like an opportunity to get long, in my opinion. Now, of course, please do not take what I'm saying as financial advice. I'm not here to give you, call outs. I'm here to share insights that I'm looking at. I'm a trader. This is what I do. So I'm not here to tell you what to do. I'm here telling you what I'm doing. I'm long gold. That's what I'm at. And we'll see if we can catch a bigger move. Thanks guys for watching. Hit that thumbs up button on your way out. Have a great day. Hey, guess what? I just found a video made just for you. Click this video to help with your trading. And thanks for watching.